So it's shaping up to be a bit of a shaky start to the new month and of course Q4 for equity markets. A bit of downside coming in to futures on Wall Street, the S&P and Nasdaq future, both trading about 1% or so lower as I record the video. But of course, zooming out, we have had a very, very strong first 9 months of 2025. The S&P up by about 13% year to date. And of course, this selling coincides with the start of a government shutdown in the United States. But as I mentioned earlier in the week, I really struggle to see how such a shutdown is an excuse to be selling down risk assets. If there's any concerns about the lack of economic data, well, firstly, the data is delayed, not cancelled entirely. And secondly, we have plenty of private sector data releases that can fill any gaps that may emerge. Secondly, if there's any hit to GDP from a shutdown, it's going to be purely mechanical in nature and recouped in the first quarter of 2026. And then thirdly, frankly, we have had 20 odd government shutdowns in the history of the United States. In those 20 odd shutdowns, a deal has always been done to reopen the government and resume federal funding. And there is absolutely no reason why we should believe that this time will be different. Sooner or later, congressional leaders and President Trump will strike a deal and they will reopen the government. The only question is whether that will take days or weeks to happen. So I think fundamentally, any dips in equities remain buying opportunities in my view. The path of least resistance continues to lead to the upside. The economy remains solid under the bonnet. Earnings growth is still very, very resilient. And of course, the monetary policy backdrop becoming looser, particularly with markets now fully discounting a 25 basis point Fed cut at the end of the month. So I think it's a little wobble in the equity market. I don't think it's going to be anything more than that. And I certainly wouldn't rule out the S&P testing 7,000 before the year is out.